Thanks for joining us. I'm Marlon Bowling. As we kick off a new trading week here, the markets are now underway. And in fact, I understand the U.S. dollar is firming up here a little bit. We'll take a quick peek at that and then talk about our grain trade. So let's go take a look at what the Dow is doing here so far early this morning, and also what the value of the dollar is doing. Here we go with a look at the dollar. Right now on the index, we have September futures now just 40 points higher at 91.910. So that's our starting point today. On the Dow Jones Industrial Average, I understand we actually firmed up a little bit on the open in New York here. Here's a quick little peek in. Right now we're up about 59 points. So just in the last couple of minutes, we firmed up a little more. 58, almost 59 points higher right now at 22,325. All right, let's take a look at the opening, excuse me, the grain trade here this morning. Let's start with the corn. And on the first trades that we have December corn now trading 3 1/4 lower at 351.5. Pretty close to the low of the opening range in the overnight trade. What about the soybean trade? How's it opening up? Well, we have November 4 3/4 higher at 973.5. Now that's interesting because it had been higher overnight, and then it actually faded away as we got into the morning hours and went lower. And then on the wheat trade in Chicago wheat so far this morning, we have December down 5 1/4 at 443 3/4. Let's bring in DeweyStrickler of AgWatch Market Advisors in Franklin, Kentucky, and get his thoughts on the opening trades here so far this morning. Happy Monday there, Dewey. What are you looking at this morning?
Well, generally speaking here, as you mentioned, beans got a little bit of a boost here. We had a sale announced to China, 261,000 tons and 126,000 going to an unknown, which is probably China. So that's given the market a little bit of lift here in the soybeans. As far as corn and wheat, we really just don't have very much news to speak of. I mean, wheat on the December's gotten up to this 450 mark here about 3 occasions, but we just have not seen any upside momentum follow through here, and the market backs off here accordingly after that. Corn generally down here, you look, there's not much fresh news in the corn. The yields are pretty variable. You're looking at the Western Corn Belt, scattered showers, Eastern Corn Belt, looking pretty much here at favorable conditions. So that said, and with the spreads showing signs of weakening, corn's just drifting back here a little bit.
From what I understand, traders are kind of looking for a corn harvest number to come in from USDA this afternoon around 9 to 12%. Would you agree with that?
I'd say it probably is that close to it. It might even be just, a tad higher.
And I understand, of course, one of the private analytical firms came out with an estimate for corn acreage next year, and they pegged it at 91.8 million acres. That was a bit of a surprise to some. It was 90.6 this past year.
Yeah, that's true. I don't know whether they're coming up with the acres, but that's probably put the corn on a little bit of defensive here this morning.
So, Dewey, you're located in Kentucky, and from what I understand, some of the early anecdotal reports of early corn harvest as it moves northward have been coming out of that area of Kentucky and southern Illinois, maybe up into southern Indiana. It sounds like so far they're pretty pleased with the results, at least the producers are.
Yeah, that's right. We're looking mostly at some variable yields. Some producers are very well satisfied with what they're looking at. Others are looking at yields that are going to be just a little bit less than last year.
Okay, I want to take a peek at the cotton market here too, and then we'll talk about livestock here on the other side of our break. On the cotton market right now, things firming up a little bit. We have December cotton now quoted at 69.46, and that is now 39 points higher on the day. Trade is still looking for significant losses from the hurricanes, but USDA did increase production in their latest crop report. We'll come back and talk more with DeweyStrickler, this time about our livestock trade, when we come back right after this. We are talking with DeweyStrickler of AgWatch Market Advisors. He is based in Franklin, Kentucky, and he joins us by phone right now. All right, Dewey, thanks again for being with us here as we get the trade underway here on a Monday. Always good to visit with you. Any thoughts on this U.S. dollar, as it seems to be fairly quiet opening up so far this morning?
Well, the dollar is just a little bit firmer here. I don't know that we're going to go very much in either direction of the dollar here over the course of the short term here. The market has kind of gotten into a little bit of a trade range here lately. We just don't have a great deal influence of the dollar here, at least for the time being.
All right, let's take a look at our livestock trades and see how we're opening up here this morning. On the live cattle, on the heels of a strong close that we had on Friday, we're seeing a little bit of follow-through buying that was pretty much expected from what I understand overnight. Early penny calls this morning were to be a little higher, and that's what we're seeing. October up 45 at 108.20 per hundredweight right now. The December contract at 113.20 per hundred would be 38 cents higher. And February up 25 cents at 117 even. Now, paint that picture in your mind there. The nearbys are leading the way up, and again, that would be, usually speaking, a technical bullish indicator. Now, if you look at the feeder cattle trade, and let's roll the screen over, and we have October now 70 higher, 151.35 per hundredweight. That's just a dime off our high of the opening range. We have bounced off our low by about 65 or 70 cents now. Let's take a look at November. It's up 73 at 151.45 per hundredweight, within a dime of its high of the opening ranges. January up 53. So, Dewey, a positive start here on the cattle side of the equation. That seems to be follow-through buying. I understand we had good cash sales last Friday afternoon.
Yeah, that's supporting the market here today. We got pretty much a slow grind higher technically in the October contract. You got some resistance here at 110, followed by 111 here in the cattle. When you look at the feeders, they look to be the strongest of the cattle complex, and I would look for the October contract to trade up into about the 154 mark.
And how are we opening on the lean hog trade here today? Well, let's take a look. We have October down 88 at 60.10 per hundredweight, and December down 60 at 57.88 per hundred. February down 55 at 63.55. So just the inverse of what we had in the cattle, where we have the most weakness on the nearbys here on the lean hogs. That would be technically a bearish sign, wouldn't it?
Yeah, we got an inside day forming here following the strength that we had on Friday. We still got a very steep discount. The futures to the cash is supportive here. I'm not quite so sure that we're going to hold at these lows here at the 58 mark. We might drop a little bit below that. I'll give the hogs benefit of the doubt that that could happen, and if it does, well, I think you'll see some pretty good buying come in the market.
Oh, okay. Well, Dewey, as always, very good to visit with you. Thank you very much. DeweyStrickler of AgWatch Market Advisors, and he is based in Franklin, Kentucky, so things are going to get interesting, Janet, as we move forward into fall harvest. And it is upon us.
I did see some combines rolling through southeast Missouri, lots of fields emptied out.
I bet you did.
Very much underway. Thanks, Marlon.
Yep.